over time. It's been very gradual, and then you get to the point where they start backing away from their bond buying. They're not even talking about interest rates at this point. So I'm sure that process is going to be carried out over several months as well. So it's kind of a heads up, I suppose, if nothing else.
You do wonder, though, if he's trying to set us up for a surprise, like say, okay, this is going to be a change, and I'm just going to start kind of warming you all up. I don't know.
It's a very slow walk to this decision, and usually you would expect an announcement by now. I mean, we're at almost the end of November. The term expires in February, so it's taken a while.
All right, got to run. Katie, thank you so much. Dave Wilson will be back with his chart of the day.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Perhaps some optimism when it comes to the supply chain. Today's number is 71,000. The historic traffic jam at the Port of Los Angeles has eased slightly. The number of import containers fallen by 1/4 to 71,000 since last month. That's pretty significant decline.
Huge.
When it and the rival Port of Long Beach announced fines on containers overstaying their welcome, while the ports have since delayed penalizing ocean carriers. The threat of fines has helped clear yards. It's nothing like a financial penalty to move it out.
A lot of discussion about the way that costs have come down and the way that we are seeing some bottlenecks easing. Does that add to the transitory narrative? It does.
Including the chip sector, and we're going to talk a lot about that when Nvidia reports. All right, in the meantime, let's get to world and national news.
Nancy Lyons is standing by in D.C. Hey there, Nance.
Thanks, Tim. President Biden is visiting General Motors Factory Zero in Detroit this afternoon. He'll continue to highlight the newly signed infrastructure law that calls for building electric vehicle charging stations nationwide, cutting emissions to fight global change, as well as building better roads. Factory Zero will build several electric vehicles for GM. Well, some troubling data is coming in from the United Nations Nuclear Watchdog Group. It indicates Iran has increased its nuclear stockpile. Bloomberg's Amy Morris with more.
The International Atomic Energy Agency says Iran has an increase of nearly 8 kilograms of highly enriched uranium, a breach of the 2015 nuclear accord. Talks to revive the deal are set to resume on November 29th, but hopes have dampened significantly since hardline cleric Ibrahim Raisi was elected president. Raisi and Russia's Vladimir Putin have discussed U.S. sanctions. China says it's reached a broad consensus with Iran and Russia on the nuclear deal. In Washington, I'm Amy Morris, Bloomberg Radio.
The man known as the QAnon shaman, Jacob Chansley, was sentenced today to 41 months in prison for his role in the January 6th insurrection. Chansley is seen in multiple videos that day wearing a buffalo hat, no shirt, cheering on rioters as they ransacked the Capitol. In court, Chansley expressed deep remorse for his actions and took full responsibility. Albert Watkins is his attorney.
Mr. Chansley owned his responsibility. He sought to be accountable.
Watkins says his client has access now to receive the health care he needs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. A couple stories we want to bring to your attention when it comes to COVID and the vaccine. President Joe Biden's administration will offer drug manufacturers, and that includes Pfizer and Moderna, funding to expand domestic production capacity of messenger RNA vaccines by 1 million doses a year by the second half of 2022. Moderna is one of my top gainers that I've been keeping an eye on, and we're seeing it active in both, I believe, the NASDAQ and the S&P 500 today.
A volatile stock, too. It's always moving higher. Like, it's always moving.
It's moving. It reacts, right?
One way or another, right?
Right.
This is a plan that was announced today by the White House, and it's aimed at increasing availability of these vaccines and also building capacity to address any future pandemic. It could result, Carol, in expanded production of vaccines in the U.S. Countries, companies, and global health agencies continue to grapple with how to balance production increases, IP rights, remember the whole idea of sharing that intellectual property with other countries, and with low-income countries still unable to secure enough doses to widely vaccinate their populations.
It says to me we'll still be vaccinating people maybe for the first time next year. It means we'll also be getting boosters. Like, that's what that kind of said to me.
Yeah, a colleague of mine, as I was walking down here, she was leaving, and she said, I'm off to get my booster. And I'm thinking, okay, I'm off next week.
Are you going to get it?
I'm going to get my booster next week.
I was looking to schedule last night.
But I can't remember if it's been 6 months months from my second shot. I have to go back and look.
Mine's definitely been 6 months, so it's
Okay,
time
then
for me
mine
to-
probably has too.
Yeah, you're right, because you were right. You were pretty close.
Yeah.
The other story by our Stacey Sherman of Bloomberg says a decline in new U.S. cases of COVID-19 in September and October had people planning return to normal holiday gatherings, but a recent resurgence has government officials issuing warnings for a second year.
Yeah, the 7-day average of new hospital admissions with confirmed COVID-19 is rising in 25 states from a week earlier. Clusters of concerns emerging in the upper Midwest and Northeast. That's according to the U.S. Department of Health and Human Services. 2 weeks ago, the trend line was rising in only 14 states.
Right, New York, overall hospitalizations for COVID-19 have climbed 11% this month. 5 regions of the state have an infection rate of more than 50 per 100,000, up from just 1 region last week. So the trend lines, again, seen this movie before, and unfortunately, but hopefully it means eventually maybe not as many hospitalizations. I don't know.
I hope.
And certainly not as many deaths.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. The feud between Amazon Visa just getting turned up a notch. Amazon considering shifting its popular co-brand credit card to MasterCard amid simmering tensions with Visa, a feud that already prompted the retailer to ban the payment giant's cards in the United Kingdom. The story developing right now, Visa shares, they are lower by 6.1%. Rival MasterCard down 1.1%. Amazon is advancing now by 0.7%. We're looking at a down day on Wall Street, stocks falling across the board. The S&P, NASDAQ, though, holding close to records. Stocks lower on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise interest rates sooner than expected. S&P now down 9, drop there of 0.2%. We've got the Dow Jones Industrial Average down 192, down 0.5. NASDAQ down 31, a drop there of 0.2%. 10-year up 8/32, 10-year yield 1.60%. Spot gold rallying $14 the ounce to $18.64, up 0.8%. Bitcoin down 0.2%. West Texas Intermediate crude oil retreating by 3.4%, 78 even a barrel now. Brent 80.08, Brent crude down 2.8%, and natural gas tumbling 7.1%. Natural gas now at $4.81 per million BTUs. After the bell, some key earnings reports. We will be hearing from Cisco. Cisco lower now by 0.4%, also reporting. Nvidia down 2.1%, and Victoria's Secret down 1.9%. And that's a Bloomberg Business Flash.
Big move in nat gas, as Charlie mentioned, down 7% today. All right, let's get back to some of what we're seeing in the world of COVID and vaccines. The Biden administration we mentioned offering drug manufacturers, we're talking about Pfizer, Moderna, funding to expand annual production, domestic production specifically, of messenger RNA vaccines by a billion, that's a B, a billion doses by the second half of next year. That's significant. That's government support, right?
It's very significant.
Yeah.
I mean, you look, 2 doses is what we're supposed to get, at least for our first set of doses.
Right.
But if you think about each American needing 3, then that covers each American.
And ongoing, perhaps?
Yeah, well,
I mean,
that's the question, right? How many boosters are we going to need?
Yeah, in the meantime, we've got new infections in Germany rising to a record and deaths. Let's just get to it, though, our daily check on COVID. Let's bring in pediatrician Dr. Peter Antal. He's Chief Medical Officer at the Behavioral Health Solution Company. It's specifically geared for kids, teens, their families. He joins us on the phone in South Lake Tahoe. Dr. Antal, nice to have you here with us. How are you?
Thanks, Carol. It's great to be here, and I'm doing great. Great. Thanks for bringing me on.
Well, it's great to have you here. Not doing so great, though, are certain areas of the world when it comes to COVID. We're still, keeping an eye on kids. We're seeing it roll out for certain kids here in New York City and elsewhere. How do you see what's going on with COVID, especially with the population you deal with, which is a younger population?
Yeah, absolutely. We don't tend to focus on children when we're talking about COVID because they don't tend to get usually as sick as older adults do unless they have a chronic condition. But children are spreaders of disease, and children still do get COVID. They still do get hospitalized, and I think the last number I saw, there have been 691 pediatric deaths due to COVID. Since the pandemic began. So it's still a serious issue. I think that, we're excited that the vaccines are now being tested and proven to be effective and safe down to, at least for the Pfizer vaccine, now down to age 5. So it gives us an opportunity to try to better protect the children.
It is a serious issue. It also can be very disruptive to people's lives. And I'm speaking as a parent of a nearly 3-year-old who's home from nursery school right now because school's canceled until at least Friday because one of the parents of one of the kids in my son's class has a breakthrough case. And I wonder, we don't know if anyone else has COVID, and likely they don't, fortunately, and everybody's healthy, but it certainly is disruptive to a lot of families out there right now. I'm wondering, Dr. Antal, when we can expect to have vaccines available for the youngest in our population, those under the age of 5?
It's a good question, and it's hard to put a timeline on that. I think both or all of the vaccine manufacturers, of course, started with adults and then are marching down in age groups and testing serially. So the testing is ongoing. I think we should expect vaccine availability down to at least age 6 months sometime, and I would hope in the next year or so.
Okay, well that's not bad.
Well, and I'm going to let you play with this, Tim, because I feel like you've got a younger one. I've got an older one. She's vaccinated. She can get her boosters and things like that. What questions are on top of mind for you, especially?
It's basically like this is our life right now, and we're choosing again not to fly with our son to see family. And for the second year in a row, we haven't been back to visit my parents in California. We have been able to see them, but he hasn't been there since 2020 or 2019. 2019, yeah.
Wow.
And I just wonder if this is. I turned to my wife the other day and I said, "This is our life for this is like how we're thinking about things now. I mean, this is kind of the new normal right now." And I'm wondering, Dr. Antal, if it goes back to what we had before, not being concerned about this.
Yeah. Well, I think what we don't know right now is what's the future going to look like. Is COVID going to eventually be conquered and go away, or are we just going to have to learn to live with it and have to get periodic vaccines maybe every few years, something analogous to what we do with influenza, although those are recommended, of course, yearly. We just don't know, and it's that uncertainty is just so challenging. It feels as though we've made progress. We're back out and going to restaurants and things like this, many of us, but we're still not quite there. And I think I want to turn it to the impact on children.
Yeah.
Imagine if you're an 8-year-old, a quarter of your life has been in the age of COVID.
Yeah.
The impact on their development, the impact on their mental health is really substantial.
Well,
I think there was a survey at Lurie Children's that said 71% of parents are worried about their child's mental health right now.
Yeah, a colleague of mine, I remember a few months ago, and I'm like, "How you doing?" And he has a young child, and he's like, "I've got a young child. I think is probably depressed because can't play with friends, can't go outside, can't do anything." And how do you definitely have to seek out some help because this is just really tough on kids.
You do, but at the same time, we do have vaccines available for those kids ages 5 and up. And I've seen just a sea change with my friends with kids those ages who have been able to get their kids vaccinated. They are so grateful.
Right, it's a comfort level. It's just like the rest of us. There's some stress that's taken off that you can be out in the world. Dr. Peter Antal, thank you so much. Pediatrician, Chief Medical Officer at Brightline, on the phone from South Lake Tahoe, California. So some interesting thoughts, especially when it comes to the younger population. Hey, coming up next, we're going to hear from a special guest at our Bloomberg New Economy Forum, which has been gathering in Singapore, several days of programming, the world leaders, tackling some of today's biggest problems. And geopolitics came up a lot.
Yeah, looking forward to that interview with Secretary Gina Raimondo in just a few minutes.
You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So the Bloomberg New Economy Forum, it's underway in Singapore. It was virtual last year. It's in person this year. It is a gathering of global leaders, and they really are dealing with major issues facing our world, and geopolitics is a big part of it.
Yeah, we're going to bring you several interviews of note today. In just a few minutes, we're going to hear from U.S. Commerce Secretary Gina Raimondo. She sat down with Bloomberg News Editor-in-Chief John Micklethwaite.
All right, in the meantime, let's get back to your top business stories. Another look at that trading day. Hey, Charlie Pellet.
Well, hello there. Big guests out of Singapore today. Can't wait for those conversations again. We've got the Dow, the S&P, NASDAQ, all on the minus side right now, Carol. 10-point drop in the S&P, 46.90, down 0.2%. Key takeaway, close to a record. We've got the Dow down 223 right now, down 0.6%. NASDAQ down 33 points, drop there of 0.2%. 10-year yield right now 1.60%. Gold up 0.8%, 18.65 the ounce on the precious metal. Big movements to the downside today in hydrocarbons. West Texas Intermediate crude down 3.2% right now, 78.19 a barrel. Did have a 77 handle a few minutes ago. Brent 80.17, drop now of 2.3%. Natural gas, so perhaps the big energy story today, plunging 6.6%. Right now, we've got natural gas 483 per million BTUs. Bitcoin down 0.3%, 60,329 on a Bitcoin. Amazon considering shifting its popular co-branded credit card to MasterCard amid simmering tensions with Visa, a feud that already prompted the retailer to ban the payment giant's cards in the United Kingdom. Right now, Amazon shares are up by 0.5%. Visa, though, plunging by 7%. MasterCard lower now by 3.4%. Pfizer has reached a licensing agreement that will allow generic drug manufacturers to produce inexpensive versions of its COVID-19 pill for 95 low and middle-income countries. Following a similar move by Merck, Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, and she says it is a welcome move by Pfizer.
The drug Paxlovid is a protease inhibitor drug. There's many others that have been in clinical trials, and I think there'll be many other versions from different manufacturers available. I think they're being smart in a perhaps competitive market. It helps with the image. And I am personally grateful, right? Maybe this sets precedent for what happens in the future and makes drugs like Paxlovid accessible worldwide quickly.
Dr. Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping, S&P down 11, down 0.2, and that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, the Bloomberg New Economy Forum is underway in Singapore. The event brings together leaders from countries across the globe in an effort to enact real change and build common prosperity. Today, we're bringing you several interviews of note from the forum, including U.S. Commerce Secretary Gina Raimondo, who sat down with Bloomberg News Editor-in-Chief John Micklethwaite to discuss the United States' relationship with Asia and her plans to restore America's standing in the region. Take a listen.
President Biden is crystal clear. When he says America is back, he means back with our allies and back in this region. So since he's been in office, the Vice President has been in Vietnam, Secretary of Defense has been here, I am here, USTR Thai is here. We are very serious in re-engaging economically with the Indo-Pacific. And when we talk about the topics, it is broader in some ways and a little bit less restrained or constrained than a traditional free trade agreement. For example, we can talk about partnerships around the supply chain. Specific partnerships around working together to make sure that we and our allies in the region have a redundant and secure supply chain. You know, Australia has critical minerals that we all need. We can talk specifically and somewhat more flexibly about partnerships. Interoperability, which is critical to facilitate digital trade. Tech standards. You know, we were talking backstage about artificial intelligence. You know, you wouldn't see setting tech standards in a traditional free trade agreement, but it is vital. Who's going to write the rules of the road for emerging technology? We want to write the rules of the road with our like-minded allies in this region. Semiconductors, you know, so I think that decarbonization and green.
Should we see this as sort of the trade equivalent of what people talked about at one time of a kind of coalition of democracies? This is America and its allies in Asia getting together in an economic way which does not involve a specific trade pact, but which involves a series of kind of complicated alliances building up to that.
I think that's exactly, that is well said. And, you know,
you can hire me if you want.
I'm sure I could not afford you. But I think that is well said. And, you know, I'm here in the region beginning the discussions, laying the groundwork. We're likely to launch a more formal process in the beginning of next year, which will culminate in a proper economic framework in the region. And
does that mean an actual agreement?
Yeah,
there would be
exactly.
Do you accept that part of the cost of this is, as you know, China and for that matter Taiwan are both applied to join the CPTPP, that could be a consequence of it, that China becomes part of the trade agreement that America left under Donald Trump?
Yeah. So I will say this, China is going to do what China is going to do, and whether or not the current members of CPTPP allow China to come in, that will be as it will be. What I'm talking about is about working with our allies in the region, allies we've had for decades, in an incredibly important and fast-growing region. You know, in the Indo-Pacific, 940 million people are entering the middle class in the next 7 to 10 years. You know, it's 4.6 billion people. Some here in Singapore, some of the best innovation and technology in the world. So this isn't about China. This is about developing robust commercial and economic relationships with our partners in the Indo-Pacific, where we have had a robust relationship for a long time, but for the past few years. I mean, the elephant in the room, the reality is America has been absent. We have been absent from the region, largely absent in the past few years. And when I am here in the region, there seems to be a strong pull to have us back. And so we want to work towards this agreement.
And of course, that was U.S. Commerce Secretary Gina Raimondo with Bloomberg News Editor-in-Chief John Micklethwaite from the Bloomberg New Economy Forum, which is underway in person in Singapore. You can check out more of that interview at Bloomberg.com, also BloombergLive.com, and you can search on Bloomberg New Economy Forum because there's another day of incredible interviews. But this is what this event is all about. They've heard from the Chinese Vice President also, who says they're going to keep open to foreign investment, stress the importance of ties with America. Again, geopolitics, very much front and center at this year's forum. Last year when it was virtual, it was all about the pandemic and getting through, muddling through, figuring out what it looks like on the other side. Different this year.
Yeah, it certainly is different. And again, if you want to learn more about the Bloomberg New Economy Forum, you can check out more of that interview and others at Bloomberg.com.
All right, let's get to World and National News. Back over to Nancy Lyon. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Biden is visiting GM's Factory Zero assembly plant in Detroit this afternoon, where he will talk about how the new infrastructure law will help spur adoption of electric vehicles. GM has said that its entire light vehicle lineup will be electric by 2035. Thanksgiving is the busiest travel time of the year at our nation's airports, and TSA Administrator David Pekoski tells NBC's Today Show, despite a vaccine mandate for agents, they will have enough screeners to keep the lines moving.
We are going to be staffed enough to handle the surge, and I expect to have no impact whatsoever with respect to the vaccine on throughput times going through the TSA screening checkpoints.
Pekoski says they plan to increase penalties for unruly passengers and are criminally prosecuting each case. 2.6 million kids from between the ages of 5 to 11 have received their first COVID-19 vaccine. That's a word from White House COVID Coordinator Jeff Zients.
Just 10 days into our program being at full strength, we're at 10% of kids. For perspective, it took about 50 days for us to reach 10% of adults with one shot.
Zeit says more than 30,000 sites are now administering vaccines for younger kids, or one site for every 900 children ages 5 to 11. Drug overdose deaths have been soaring in America during the pandemic, and the government is out with new figures showing more than 100,000 Americans died between April 2020 and 2021, the height of COVID lockdowns. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. So we just heard from John Micklethwaite, Bloomberg Editor-in-Chief, along with the U.S. Commerce Secretary Gina Raimondo at the Bloomberg New Economy Forum in Singapore. There's all kinds of leaders from all walks of life, politics, business, finance, the food industry, you name it, certainly climate change. And one of the prominent leaders that was there was Goldman Sachs Group Chief Executive Officer David Solomon, and he was talking about the markets and volatility. Check it out. He caught up with Bloomberg's Francine Lacroix.
When I step back and I think about my 40-year career, there have been periods of time when greed has far outpaced fear. We were in one of those periods of time. And generally speaking, my experience says that, those periods are not long-lived. Something will rebalance it and bring a little bit more perspective. Certainly, given that it feels like inflation's rubbing above trend, chances are interest rates will move up. And if interest rates move up, that in and of itself will take some of the exuberance out of certain markets.
Yeah, take a little bit of the air out. That, of course, was Goldman Sachs CEO David Solomon at the Bloomberg New Economy Forum with our own Francine Lacroix.
Here's what I home in on, okay?
What?
Certain markets. What does he mean by that? Are we talking about the cryptocurrency market? Carol, I woke up to the
equity
news.
Markets?
Equity news? Equity markets? Are we talking about Dogecoin and the exuberance that we talked with Scott Meinert about a few weeks ago at the Milken conference?
No, that's a really good question. And it's hard to say, markets is a very broad term, and there's commodity markets, there's the energy market. I mean, there's a lot of different things.
Real estate right now, too.
Right.
There's no shortage of exuberance.
Yeah, and maybe he means a little bit of everything.
Yeah.
But I think I also wonder whether, there's emerging versus developing, right? So you do wonder what he's talking about. But, and I think most would say that if you start to see interest rates go up to some extent, even a little bit from here, that it will slow down some of the momentum.
Yeah, I mean, certainly we'd see that with real estate if we did see interest rates move higher, because mortgages would get more expensive, and that would in turn lead to fewer price wars.
Less government policy, too, which has been really helping out a lot of individuals. That will probably take some of the air out of the run-ups that we've seen. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks have been lower all day long. They remain that way right now. We've got an hour and 13 minutes to go ahead of the closing bell. The S&P down 8 right now, drop there of 0.2%. We'll give you the numbers first. The Y in a moment here with the Dow now down 190, down 0.5%. NASDAQ down 35, drop there of 0.2. We've got the 10-year up 7/30 seconds. 10-year yield right now 1.60%. Stocks are falling on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise rates sooner than expected. Again, that 10-year yield, 1.60%. Spot gold up $12 the ounce at $18.63, up 0.7%. A retreat for West Texas Intermediate crude down 3%, dropping $2.47 a barrel, $78.29. Natural gas now down 7%, $4.81 per million BTUs. Bitcoin down 0.4%, 60,235 right now on Bitcoin. Lots of earnings after the closing bell today. We'll be hearing from Cisco down now by 0.4%, Nvidia down 2.4%, Victoria's Secret lower now by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You are indeed. All right, Charlie, thank you so much. So perhaps a sign of Tesla's success. We're going to get into that in just a moment. A validation of the EV world, and a company, though, with no sales, worth $150 billion. That is Rivian Automotive, which shot out of the IPO gate just last week, doubled in value before dipping back just a hair. It's still up, Tim, 83% since becoming a publicly held company.
$125 billion in market cap, fewer than 100 of these vehicles sold so far. Joel, would Rivian be the company that it is today without that investment from Amazon?
Joel Weber, editor of Bloomberg Business Week, along with Matt Winkler, who is, of course, editor-in-chief emeritus here at Bloomberg News.
The answer to that is a definite no. There was one company that basically has laid an appetite for electric vehicles, not only in the U.S., but globally, and that company is Tesla, right, Matt?
Correct.
So can you talk about the assignment was, let's talk about Rivian's going public.
Yeah.
This other company 10 years ago went public. How did they compare when they went public, man?
So, Joel, you are actually the person to answer your own question, but I'll do it for you because you said, I think this piece really belongs in the technology section of Bloomberg Business Week. And I think by that you meant really what this is about more than anything else. It's less about cars per se and more about technology. And what Tesla is about is that back in 2010, when it went public, it was promising something that was completely absent from the automotive industry, and that is the zero-emission vehicle. And this is at a time when not a lot of people yet have truly appreciated the existential threat of climate change. The thing that happened was that Tesla turned out to be a great product from the get-go, and that people who bought the Model S, for example, yours truly included, a long time ago, 2014, realized it was every bit as competitive, if you like, and comfortable and efficient, in fact, some ways much more so, than an internal combustion engine. And Tesla, to answer Joel's question with a fact, Tesla sold 400 times the average annual growth of the automotive industry in a 10-year period. Think about that, 400 times. Now, when you that's like eyeballs, okay? We all get excited about eyeballs these days in technology. Tesla was able to create something, and that, of course, paved the way for Rivian and these other companies. And that's why Rivian has the valuation that it has.
Okay, but this is no easy feat, and it's something that Elon Musk tweeted about. He tweeted when Rivian went public, I hope they're able to achieve high production and break-even cash flow. There have been hundreds of automotive startups, both electric and combustion, but Tesla is the only American car maker to reach high-volume production and positive cash flow in the past 100 years. How does Rivian do this?
Well, there's someone called Jeff Bezos, for one thing, and Amazon, and that's a pretty formidable if you like, backer, big shareholder, biggest shareholder. And that is something that makes Rivian very different from Tesla when it started. You're absolutely right, or he's absolutely right. that Musk turns out to be a relative miser by comparison to Rivian in the spending of money. Certainly in the 2 years before it went public, Rivian has spent far more money. Tesla spent a 19th of what Rivian spent. Having said that, though, the world's changed. And so the betting is that because the world's changed and because Amazon has already ordered 100,000 vans, and there's some thinking here that vans are really an important part of the market that people haven't thought about until Rivian came along, and Rivian's going to benefit from all kinds of commercial logistics operators. It's not just Amazon are going to embrace the electric van.
And they have first mover advantage in that, right?
They could be, for sure. I mean, you know, that's where they are right now, and that partly explains why they're where they are. But coming back to Musk's point, if you're an investor and you're a shareholder, you have to take seriously what he's saying, because it's true in 100 years, whether you're looking at internal combustion engines or electric, no one has been able to get the kind of break-even cash flow performance that Tesla has, and that makes Tesla, you know, stand out for sure.
One thing I wanted to ask you, what's missing? Kathy Wood, and I know you've covered her a lot, you've talked to her a lot, I've talked to her a lot, we've talked to her a lot. She didn't invest in Rivian, did she?
No.
Or at least so far we know.
Right, and we did catch up with her somewhat belatedly right after the Rivian IPO. And what we really wanted to know was, has she changed her view in any way? And her view, of course, is she's an unabashed supporter of Tesla, remains so, and believes that Tesla, for example, has billions of miles, if you like, of memory that is incorporated in the Tesla ecosystem that no other EV maker has. And that is a huge advantage when we get to things like automotive, self-driving vehicles, that Tesla has a huge advantage over everyone. And she hasn't changed her view there.
You know, Matt, as long as we've got our investor hat on here, the question I wanted to ask you was, this was surprising because I think people forget about it. When Tesla went public, did it have products? Because Rivian's gone public and really doesn't have much of anything to show yet.
Yeah, Tesla actually in 2010 had the Roadster, and the Roadster had been around for many years actually, and was written up by the arbiters of automotive excellence as an excellent vehicle, even though it was a Roadster. So there was a lot of evidence to suggest that this electric vehicle that Tesla had created was a standout. And of course, that paved the way for the Model S in 2012.
So takeaway from Rivian and its blockbuster IPO, Tesla, you're for real? Is that kind of the takeaway here?
If you ask Kathy Wood, she would say yes. Everything that you see from Tesla is definitely real, and only more so. That it's only going to increase.
And just 20 seconds or 30 seconds, what does it mean for Rivian then? We'll see.
Well, you know, at this point, it's almost rising tide lifts all boats. We're not just talking about Rivian. There's Lucid, which is another highly bad. Look, here's the thing. Here's the takeaway. More than 2/3 of the top automakers in the world, top 10, are now electric. Think about that. That was improbable, if not impossible, a year ago to say.
That's a short time. That's a short time frame for such a big difference.
The message investors are sending is EVs are here to stay and they're the future.
And what do we talk about every day? Rivian, Tesla, all of them. Matt, thank you so much. Really appreciate Matt Winkler. He's editor-in-chief emeritus at Bloomberg News. Check him out at Bloomberg.com. Joel Weber, thank you so much. This story in the upcoming issue of Bloomberg Business Week magazine. Joel, of course, editor of Bloomberg Business Week, that new issue, out tomorrow in newsstands, online, and always on the Bloomberg terminal. You are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, November 17th, with the Dow, the S&P, and NASDAQ all declining. The NASDAQ 100 index, though, pushing higher, up now by 0.2%. Right to the numbers. We'll give you the why in a moment, with the S&P down 7 now, lower by 0.1%. The Dow down 179, down 0.5. NASDAQ down 27, a drop there of 0.2%. 10-year up 8/30 seconds, 10-year yield 1.60%. Stocks lower on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise rates sooner than expected. Traders took some risk off the table this morning as data showed new home construction slowed down, suggesting builders are struggling to break ground on projects amid high materials prices and ongoing labor shortages. As for the Federal Reserve and how it's interpreting the inflation data, Julie Beal is portfolio manager at Kane Anderson Rudnick in Los Angeles.
I'm a big believer in reversion to the mean, and even 2% is quite low if you think about interest rates. So it depends a lot on the strength of inflation and consumer demand. I think if inflation is strong and consumer demand continues to be very strong, the Fed isn't actually going to have a choice. We can dot plot all we want, but at the end of the day, if inflation gets overheated, it's going to force their hand.
Gold up now by 0.7% to $18.63 the ounce, up by $12.75. West Texas Nvidia crude down 3%, $78.31 a barrel. Natural gas down 6.7%, $4.82 per million BTUs. Target tumbling after warning that cost pressures are creeping up. Target down 4.9%. Also after earnings, TJX up by 7%. And reporting earnings this morning, we did hear from Lowe's companies. The home improvement retailer up by 0.8%. S&P down 9, down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So looking forward to this next guest. He and I email back and forth. He always sends me thoughtful notes. And when it comes to the economy and some of the big trends that are going on, he's got a research note out, and it's entitled, "It's Not the Economy, Stupid, It is Vulnerability." Not my words. They are the words of Peter Atwater. He's adjunct professor of economics at William & Mary. He's back with us on the phone in Pennsylvania. Peter, how are you?
I'm doing great, Carol. Thanks for having me back.
So listen, it's great to have you back because, Peter, you know, you listen to us. As I said, you send notes and thoughts and observations. We are all talking a lot about inflation and supply shortages. The Bloomberg New Economy Forum is underway in Singapore. That is certainly top of mind on a global level, whether it's tight labor markets, we see strong demand. There's like this really weird, though, disconnect because we keep talking about consumer sentiment. Everybody is so downtrodden. What is your take on all of this? What's really important?
So I think what's happened is that in the last year, we've awakened to vulnerability. And vulnerability, a lot of people talk about it, you know, Brene Brown and folks think about it in a different way than I do. And I think of it in terms of vulnerability as the opposite of confidence, that when we don't have certainty, when we don't have control in our lives, we somehow feel threatened. Nowhere was that clearer than with the pandemic last spring. But what we've seen since then has been this ebbing and flowing of vulnerability. And, you know, you mentioned inflation and supply chain shortages, and that's scarcity. You know, that's how we interpret both of them psychologically. And so I think that below the surface of these record markets is really growing anxiety that things are not as certain as we'd like them to be, and we're not quite sure what to do.
So what is the connection between that vulnerability that you write about, lack of childcare, the ongoing pandemic? How does that manifest in a lack of spending or in consumer activity? What's the connection there?
So I think that you have to look at it by economic strata because, you know, when I wrote about the K-shaped recovery last year, it was about this divide in confidence and ability. And so what you're seeing for those who do feel confident, that there is almost this sense of unlimitedness in terms of what they can afford and what they can spend and what they are spending and spending on. But as you dig down deeper into different parts of the economy, you begin to realize that wage growth isn't keeping up, and that people are now being forced to make real choices between what they can afford, what do they need versus what do they want.
So wait, Peter, so somebody at home would say, wait a minute, Peter Atwater, everybody keeps talking about we're paying workers more and more, they're doing okay. We've also done the stories that it's not keeping up with inflation. So, what is your pushback against that, we do the stories on Wall Street about bonuses going up and, people jumping firms. How do we make sense of that?
So I think firms have to be really careful in trying to address what they think the problem is through money. Because what's becoming very clear as I talk to businesses and business owners, as you dig deeper, what they're finding is that the things employees need go beyond just more, higher wages. I mean, if you look at the strikes that are going on, yes, wages are a part of it, but there's a much greater sense of working conditions and, what do we do about childcare? And, firms that didn't respond to the vulnerability that employees were feeling last year are really taking it in the shorts now.
Is this a firm level approach though? Is that the most effective way to tackle it? Because you have Democrats in Washington saying this is the type of stuff we need to write into legislation. Yeah,
I'm a believer that when it comes to vulnerability, proximity matters. Every crisis is local. And so policymakers want to solve these problems with broad brushes, but whether you're Republican or Democrat, the issue is much more localized. And so I would much rather see, whether it's local communities or businesses themselves, be given the tools to deal with this versus some sort of a top-down approach. The top-down takes too long. It tends to be too broad in its approach. And honestly, when we feel vulnerable, Washington feels very abstract to us. It's hard to gain a sense of control when power is far away from you.
Peter, you're right. The Great Reassessment is not only a reflection, well, let me go back. Traumatic events also foster a reconsideration for what matters and how with whom we wish to spend what we view as increasingly precious time. Been there. That's my own personal assessment. You go on to say the Great Reassessment is not only a reflection of that, but a reflection of the fact that we never go back to before or after trauma. Our actions are framed by our experience, and we move forward looking to eliminate the vulnerability we've experienced. We must create new norms, routines, and habits. Will you say then, go as far as a society, and certainly as a professional corporate society, we're not facing up to that yet? I feel like we see it with the tug between hybrid, not hybrid, going back to the office, not going back, corporate executives saying, oh yeah, we're cool, we're all in on, flexibility, and yet behind the scenes they're not. Your thoughts? Yeah,
so I really believe that, one, we don't go back to what was. And so I think business leaders who are expecting employees to go back are missing a very significant part of this, which is, one, the longer people are out, the fewer employees will actually come back, just statistically. At this point, you're lucky if 70% of your folks come back just based on turnover. But I think that the bigger concern here is that companies are not hearing the vulnerabilities that employees have experienced in the last year. And so they need to be listening for where do employees feel like they don't have control today, whether it's in their workplace or at home.
Right.
And what do they still think is uncertain as far as the work environment?
So hang on for a second. When you come back, I want to ask you about the implications of that, of companies maybe not facing up to that and what that means, especially to, as you know, a Bloomberg audience, what it means in terms of financial markets, the economy, economic growth, productivity, and so on, the things that are so important to certainly those folks who listen to us.
Yeah, Peter Atwater, professor of economics at William & Mary. In the meantime, let's get a check of the latest world and national news. Nancy Lyons standing by in D.C. Hey, Nance.
Thanks, Tim. House Democrats are debating whether to censure their colleague, Republican Paul Gosar of Arizona, and strip him of all committee assignments. It would be in retaliation for Gosar tweeting an anime video that showed him striking Congresswoman Alexandria Ocasio-Cortez with a sword and also attacking President Biden. House Speaker Nancy Pelosi says Gosar must be held accountable.
Depictions of violence can foment actual violence and jeopardize the safety of elected officials, as witnessed in this chamber on January 6, 2021. It is inconceivable that a member of our community here would wish to repeat the violence of that dark day.
Pelosi was followed on the floor by House Minority Leader Kevin McCarthy, who says Democrats are using the incident to distract from their failures. He also accused them of hypocrisy. He was one of the most famous faces of the insurrection, Jacob Chansley, the self-proclaimed QAnon shaman who wore a coyote skin headdress into the Senate chamber. Well, he has been sentenced to more than 3 years in prison for his role January 6th. The punishment was less than the 51 months prosecutors had requested. And the Manhattan DA will ask a court to exonerate 2 of the 3 men convicted in the 1965 assassination of Malcolm X. This follows a 2020 Netflix documentary which cast doubt on the guilt of Muhammad Aziz as well as Khalil Islam. District Attorney Cyrus Vance Jr. tweeted today his office, the Innocence Project, and a law firm would move to vacate the convictions. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. So we've got a story by our own Janet Lauren. She follows universities and endowments, really the financial picture of so many of the universities and colleges around the United States, really around the world. And I think it's safe to say that the ivory tower getting greener.
$42 billion for Yale, $38 billion for Princeton, Columbia, $14 billion. Janet Lauren puts this into perspective by writing, all told, it's as if the Ivy League added another Harvard to its combined fortune in the space of a single year because of their investment gains in the last fiscal year for the 8 members, about $50 billion for a total of more than $190 billion in assets. So, Carol, you know what they're doing?
What?
Everyone goes to college for free.
Yeah, no, they're not.
Oh, they're not. I'm sorry.
And the nation's elite universities, I mean, they're amassing vast wealth very, very quickly and raising some uncomfortable questions in the process. These are Janet's words she's reporting out in this story. And we've seen this come up before when it comes to lawmakers and policymakers. In 2017, as part of a Republican-led tax reform, we've seen colleges lobby against a tax on schools with endowments of at least $500,000 per student. It was passed back in 2017, as I said, as part of that Republican-led tax reform. It affects roughly 3 dozen schools, including Harvard, Yale, and Princeton. Now, the Democratic plan announced in September for President Biden's then $3.5 trillion economic agenda curtailed the tax as long as schools address tuition costs, which, having just done the college application and done that whole tour, you know, you're paying anywhere from $60,000 to $80,000 easily per year for college and university.
Okay, my comment was in jest, of course, about colleges paying for all students. They're not. But with their newfound wealth, schools are bolstering financial aid. They are seeking to improve affordability for low-income students. They're increasing faculty and staff benefits and using some money to help offset those financial hits from COVID-19.
But is it on par with the amount of wealth accumulation? And at some point, you know, how do you look at these firms, right? These universities, nonprofits.
But I think that was a good word to use.
Yeah, exactly. All right. Anyway, check it out at Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got red on the screen, 43 minutes to go ahead of that closing bell. The Dow, the S&P, NASDAQ all lower. However, truth be told, the S&P 500 index holding very close to a record, down now by 0.1%. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Charlie, that's right. U.S. stocks trading in the red today, helped by a 6% decline in Visa. Dow's currently down 163 points. S&P's dropped 6. NASDAQ is lower by 30. The U.S. 10 yield at 1.6%. Gold is up 14 points. Transport's dropped by 225. And Bitcoin is little changed. Among the main 11 S&P sectors, only consumer discretionary, healthcare, and real estate were in the green. Energy was under pressure, and leaders to the upside in the Dow, Apple, Home Depot, and Boeing, while Visa fell 7%. On news, Amazon is in talks to switch their co-branded card to MasterCard. After earnings, TGX jumped 7%, Target fell 5%, and in other news, Chobani filed for an IPO, while Cassava Sciences plunged 23%, following a report of an SEC investigation. Wrapping things up, Nvidia and Cisco report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to continue our conversation. With us is Peter Atwater, Adjunct Professor of Economics over at William & Mary, still with us on the phone in Pennsylvania. So, Peter, you were talking about recognizing how the vulnerability that's out there and what that is doing to individuals, people's confidence. And I do wonder, what's the significance of the world of companies not facing up to that? We're not going to go back to life as it was before our trauma, which was the pandemic. And I guess what I'm getting to, and my producers know this really well, like when we're booking a guest or somebody says something, it's like, tell me why I care. Tell me why as a human I care, why as an investor I care about this.
You care about this because vulnerability is as much a cognitive condition as it is anything else. So your employees are preoccupied. They're worried about something that's happening in their life, not what is driving your business. And I think for employers, they need to recognize that that has a real impact on their bottom line. I know from experience, working with managers who have found that, it's the car trouble that an employee faces that is what is making it difficult for them to show up on work and to pay attention at work because they're worried about that, or the child care, or these things that seemingly feel minor to many corporate leaders is what is preoccupying their employees day in and day out.
Are the economic incentives, though, aligned for companies on a broad level to take those concerns seriously? And I'm not talking about people who are salaried and have 401ks. I'm talking about people who work in hourly positions and
who probably worked during the pandemic, right?
Absolutely.
Yeah.
Yeah, I think you're seeing this in healthcare where nurses and emergency room doctors are saying, I've had enough.
Yeah.
And so you're seeing people make deliberate life choices, career choices that have significant ripple-on effects to the rest of society. And I think that, where there has been the greatest, grievances today on the employee front are those who have experienced the pandemic outside of the home, those who stood for a living. And I think that increasingly they feel unheard, having provided, in many cases, heroic help, in health, in food, in transportation, and are wondering to what end.
So what's interesting too, and it's funny, you say about especially, Peter, in the healthcare area. We talked with Dr. Imana Abuzaid yesterday. She's the CEO of Incredible Health, and she works with the nursing industry and helping healthcare systems get access to the nurse care that they need, and talked about the toll it has taken on these individuals and how there's a real shortage of nurses at this point. So as we look forward and we try to figure out what 2022 looks like, if we underestimate the impact of individuals feeling vulnerable and what that means in terms of productivity and economic growth, it sounds like we are very much at risk of seeing a potential slowdown or missing out on signs of a policy mistake by missing something like this that will play into, and I'm not trying to be so cold, but will play into the economic statistics that will, bear out maybe later next year.
Yeah, I think that's right, particularly because in many cases, these are stacked vulnerabilities. And on the one hand, you have those who have worked outside of the home, day in and day out for the past 18 months. And on the other hand, you have stacked confidence, stacked privilege, as it were, for those who have been able to easily navigate the pandemic. And I don't think I think one of the things the pandemic has created is blindness and a lack of awareness to the condition of those who serve this amazing, deliver at any time, day or night, to your doorstep economy.
No, that's not to be underestimated. I agree.
And we're seeing that in the supply chain. It's just one window into it.
To build on
Carol's, that exists.
Just to build on Carol's question, Peter, do you see a fundamental shift on the other side of the pandemic? I think early on in the pandemic, we felt this sort of unity and an appreciation for so many of these people. And I'm wondering if that has manifested in higher wages and an appreciation that has manifested in something tangible, and if that sticks on the other side.
Yeah, I'm more afraid, Tim, of zero-sum thinking developing, where increasingly, because people are frustrated, they feel that someone's gain has come at their own expense.
Yeah. No, it's certainly something to kind of absolutely layer on as we look at what's going on in the economy and trying to understand. And it's interesting, Peter, considering we've had a lot of conversations with CEOs and leaders who are saying they're paying attention to the stresses on workers and trying to make sure that they meet their needs. But it sounds like there's a lot of gaps in that.
Yeah, I mean, we see that playing out. I think we see that playing out on Wall Street right now, certainly.
Right,
and we see it with the pushback, and we see it particularly with Jane Fraser at Citi.
That's a good point. Absolutely. Peter Atwater, thank you so much. Always give us some things to think about. Adjunct Professor of Economics over at William & Mary, on the phone from Pennsylvania. You can check him out on Twitter at Peter_Atwater. All right, coming up next, Chart of the Day with Dave Wilson.
Ooh, and the Song of the Day as well.
Yeah, we're going to get to it in just a moment. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, just about a half an hour left in today's trading session, just under. We're going to do the chart of the day.
Chart of the day, the stock of the day, and of course, I can say this, my
What?
favorite, the
What?
song of the day.
Yes, you can. Can you guess it, though?
Well, we had Tom Petty playing when we finished our last interview, so I was thinking, it could be Tom Petty.
Maybe a little warm-up. All right, we'll find out in just a moment. Let's get back, though, to Charlie Pellet with what's up with the trading day. Hey, Charlie.
All right, well, not the indexes and averages. They're not up right now. The Dow, the S&P, NASDAQ, all on the minus side right now. We have got 28 minutes to go ahead of the closing bell. But the NASDAQ 100 index, I'm looking at green there, up 0.1%. NASDAQ Composite Index down 42 points right now, down 0.3%. S&P down 9, drop there of 0.2%. The Dow down 159, down 0.4. NASDAQ 100, by the way, up by less than 0.1%. Russell 2000 down 1.2%. Stocks lower across the board, falling on concern that inflation could pose a challenge to the global economic rebound. 10-year up 9/30 seconds. 10-year yield right now 1.60%. Spot gold up 0.8%. 18.64 the ounce on gold. Big move to the downside in the energy markets today. West Texas Intermediate crude down 2.8%, 78.49 a barrel. Did see trading with a 77 handle earlier in the session. Brent crude down 2.3% now, 80.57. Brent also is trading below $80 a barrel. Natural gas, though, is the big story, plunging 6.5% right now, 4.83 per million BTUs on nat gas. Amazon.com is considering shifting its popular co-branded credit card to MasterCard amid simmering tensions with Visa, a feud that already prompted the retailer to ban the payment giant's cards in the United Kingdom. Visa down 5.5% right now. MasterCard down 2.8%. Amazon up by 0.4%. The healthcare industry, like so many others, is dealing with a worker shortage amid vaccine mandates. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health. She says there are several reasons for staffing issues at hospitals.
I know there's a healthcare worker shortage. I don't think we can blame that on the vaccine mandate. I mean, to be honest, like 30% of the workforce seems to have left. In some emergency rooms, that number is as high as 80% turnover since the start of the pandemic.
Wow.
But I think it's multifactorial, right? It's people going home to take care of their families, individuals who have gotten sick and have long COVID. Individuals were laid off early in the pandemic, right, and lost their livelihood, and now don't want to return back to the industry after they pivoted, and there's burnout.
Dr. Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we checked, they're all higher right now. Pfizer up 2.8%. BioNTech's ADR is up 4.7%. AstraZeneca's ADR is up 0.2%. Moderna out of Cambridge up 4.4%. J&J Johnson & Johnson up 0.6%. Recapping, stocks lower, holding close to a record, down 7, down by about 0.2%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Where's Nancy Lyons when I need her? Nancy, where are you? It's like classic rock, right? Like 80s?
90s.
90s, 80s, 90s.
What goes around comes around?
Sort of. Round and Round is the song.
Round and Round, okay.
By a band called Rat.
Yeah, no.
Out on the West Coast.
We could have played that one, the entire song, and we wouldn't have gotten this.
Yeah, I hear you.
Okay. That's pretty obscure,
I
right?
got a well, yeah, but here's a really obscure piece of trivia for you.
Nancy Lyons knew it.
Nancy knew it. Oh,
Of
where were
course she
you?
did.
Come on, Nancy.
Yeah.
Is that Rat with 2 T's?
It is.
She
Okay,
says
Nancy.
from her, can I say this, Nancy? Are you okay? I'm going to assume you're saying yes. From her high school days. I won't say what year. That's from Paul Brennan, our producer from his 1984 high school days. I could see, I could
She
see,
doesn't ask you, Paul, if she can say it. She just goes and says it.
I could see Paul rocking out to that. I bet he looked a little differently, though.
One quick piece of trivia.
What?
The video for that song featured the band's manager's uncle. And that would be Milton Berle.
Oh my God. That's
In
nuts.
drag.
In drag? Wow.
In any case.
Whoa.
So,
I don't even know where to go with that one.
Oh, well, let's not go anywhere.
All
Let's
right.
go to the chart instead. You know, why that song, Round and Round, you know, you think about rotations, and that's what the folks at Crescat Capital are looking for, what they call a great rotation into cheaper value stocks and away from those faster growing U.S. companies. And one reason they expect that to happen is just a valuation gap, the likes of which you basically haven't seen before. And it's an indicator called enterprise value. So you're looking at, you know, the company's market value plus the debt on their books minus the cash. So an alternative to just share price, and comparing that with sales. So what they call EV to sales. Now, EV in this case, not meaning electric vehicles, but enterprise value. And when you compare, you see the Russell 1000 Growth Index at about 5.4 times. You know, you look at the Russell 1000 value, it's at about 2.4. You know, subtract, you get a number 3. Earlier this month, it was 3.4, got above a peak from 2000, right around the time that the dot-com era was ending.
So growth overvalued, value undervalued, or what?
That's their conclusion, absolutely. And that's why they're saying it's time for that great rotation. And
do you know how many times people have been calling for that great rotation?
yeah, that's true.
I mean, I guess if at some point it will happen.
Literally
but-
my entire career.
Exactly.
But here's something at
Seriously.
least that kind of puts where we are now in a historical context.
Yeah.
Well, we all know what happened after the dot-com bust, Dave, and it shows this on your chart.
We do, absolutely. You get to the mid-2000s and, you know, in fact, you had growth stocks cheaper than value.
Yeah.
Just goes to show you how things have changed.
It was a runaway market. I mean, right?
Yeah.
We just slapped .com on any name, and it was like it just took off, right? Didn't matter what the fundamentals
That's a whole
were.
nother story, and we'll save that one for tomorrow.
Ooh,
Dun, dun, dun.
wow.
Deep tease.
How did you
David
know that,
Wilson.
Carol?
Me and Dave Wilson, it's like a mind meld.
Okay.
In
Well,
any case, well, okay, so you know my stock of the day, Carol?
Oh,
That would be
the mind meld goes so far, Dave.
All right, that would be Penske Automotive Group. The ticker is PAG. You might have heard of him. Roger Penske, known for his participation in race car
He and Dave
events.
Letterman, right? Didn't they do it together?
Yeah.
I think so.
Yeah,
Anyway,
a
go
little
ahead.
bit. In any case, Morgan Stanley, the analyst over there, Adam Jonas, who's pretty well known for his calls on Tesla, he's turning more negative on auto dealers as a group, specifically with Penske. He cut his rating to underweight from equal weight, so the equivalent of sell from hold. And what you got out of that is the biggest loss for Penske, ticker, PAG, in 20 months. It's down about 10.5%. In fact, we've seen declines across the group. Sonic Automotive, Lithia Motors, AutoNation, Asbury Auto, Group 1 Automobile, all down roughly 10%.
Maybe I'm thinking Bobby Rahal. That's where David Letterman in terms
That's
of
true.
racing. Forgive me.
Rahal Letterman.
Yep, right?
Hey,
Good
check
stuff,
out Dave's
Dave.
Stock of the Day. It's just after 4:15 p.m. Wall Street time. It's on Facebook, LinkedIn, and on Twitter at The One Dave.
You too can maybe get a mind meld with Dave Wilson.
I feel like Nancy Lyons has a mind
You
meld
totally
with
have a
Dave
mind
Wilson.
meld.
Don't think so. Anyway, President Biden is taking aim at higher gas prices and suggesting something criminal may be
The
involved.
president sent a letter today to the head of the Federal Trade Commission, Lena Khan, calling for an investigation into, quote, mounting evidence of anti-consumer behavior by oil and gas companies. The letter expressed concern about the gap between the price at the pump and at the wholesale level. Gas prices have jumped nearly 50% since last year. The FTC is an independent agency, though it could decide to follow the president's recommendations. State and federal regulators routinely launch investigations into rising gas prices, though they rarely lead to concrete action. In Washington, I'm Nathan Hager, Bloomberg Radio.
The president is in Michigan today, touring GM's Factory Zero, where the company will build its electric vehicles. Well, the House is nearing a vote on whether to censure one of their colleagues, Paul Gosar, for distributing an anime video depicting violence against Congresswoman Alexandria Ocasio-Cortez, as well as President Biden. Speaker Nancy Pelosi calls his actions inconceivable.
This is about workplace harassment and violence against women. Yet, the member has never apologized for his actions. It's a cartoon. Relax, he said. Really? A cartoon? relax.
Pelosi was countered by House Minority Leader Kevin McCarthy, who says the move to censure Gosar is the definition of abuse of power. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Carol Massar and Tim Stenbeck in the Bloomberg Interactive Brokers studio in New York. We are getting to another one of the most read on the Bloomberg terminal.
Yeah, and this has to do with the Miami condo collapse, the catastrophic structural failure that led to the collapse of the Champlain Towers condominium outside of Miami. That was back in June. We talked about it a lot on here, and certainly all of the national news coverage was on it. Was linked apparently to construction of a luxury high-rise development next door, according to a lawsuit filed by families of people that were killed in that disaster.
Developers of the Renzo Piano-designed 87 Park were improperly allowed to build higher and larger than originally entitled. That's according to the suit filed Tuesday in Miami-Dade County Circuit Court. The project site, Carol, was sloped so runoff poured into Champlain Towers and undermined the building's structural integrity, which was also damaged by excavation and pile driving, the suit claims.
All right, and then when residents at Champlain Towers raised concerns about the work to the developers, or to the developer, lawyers for project developer Terra Group offered $200,000 in payments to residents on condition of confidentiality rather than fix the damage, according to the complaint. It cited a 2019 email by Terra Group CEO David Martin to other development executives saying, quote, keep moving the job forward, do not let any neighbor delay us.
Terra Group has developed residential and commercial real estate projects throughout the South Florida area, totaling about 5 million square feet and valued at $8 billion. The complaint also named the general contractor and engineering consultants on the project as defendants.
And we should point out the developer's lawyer denied the allegations in the lawsuit. Listen, what this has come to is there's a lot of debate over coastal development where older and less affluent residents are struggling with the cost of upkeep in some modest buildings while more glamorous new developments are being built. I mean, this is new construction, old construction, and then you're dealing with coastal properties that really get kind of a lot of wear and tear because you're so close to the elements, meaning the ocean.
Yeah, and what are those coastal properties going to look like in a few decades?
Exactly. All right, you're listening to Bloomberg Radio. Carol Massar, Tim Stenbeck.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all declining. S&P and NASDAQ still trading close to records. S&P down 5 right now. That is a drop of just about 0.1%. NASDAQ lower by 29 points, drop now of 0.2%. The Dow slumping 139, down 0.4%. The Dow at 36,002 right now. Interestingly, NASDAQ 100 index higher by 0.1%. Tech-heavy NASDAQ 100 outperforming major benchmarks, being led by a rally in giants Apple and Tesla. Right now, we've got the 10-year up 12.30 seconds, 10-year yield 1.59%. Spot gold up 0.8%, 18.66 the ounce. Cannot ignore what's happening with energy today. West Texas Intermediate crude down 2.8%, 78.47 a barrel. Natural gas dropping 6.4%. Nat gas right now 4.84 per million BTUs. After the bell, lots of closely watched earnings. Cisco Systems trading higher now by 0.2%. The chipmaker Nvidia will also be reporting, down now by 3.6%. Also checking in after the bell, Victoria's Secret trading lower now by 2%. Recapping stocks lower, S&P down 4, drop of 0.1. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellett. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The U.S. has spent decades cultivating closer ties with India, but a new dispute threatens those years of progress. Joe Biden should act now to defuse it. At issue is India's purchase of the powerful Russian-made S-400 air defense system. Delivery of the system will technically put India in violation of the Countering America's Adversaries Through Sanctions Act, which bans dealings with major Russian arms contractors. The U.S. imposed sanctions on Turkey after it concluded a similar deal in 2017. But India deserves more lenient treatment. That's because India is plainly cooperating with the U.S. on other security matters, one of the key conditions for a sanctions waiver. Levying sanctions, even symbolic ones, could set this increasingly important relationship back years. The best way to deepen the alliance is to show India the benefits of cooperation, not the costs of disagreement. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 9.5 minutes left in today's trading session. Definitely a risk-off trade. We've seen yields back off. Let's get to it with Alan Zafran back with us, founding partner and co-CEO at IEQ Capital. He is once again on the phone from Foster City, California. Alan, how are you?
Well, I'm doing great, but there was a 4.1 earthquake about 20 miles from me about an hour ago. So we got a little shaken up here on the 18th floor. But we're doing fine.
Wow.
But you're a Californian. I'm a Californian. This is a way of life. It's a fact of life. We're used to this stuff, right?
Yeah, San Ramon is back on the map. Check it out, 4.1. But we're doing fine.
Okay,
no problems here.
Well, I feel like that's reflective of what's going on in the markets a little bit.
Little metaphor.
It's not like we're falling off a cliff or anything. We're actually still kind of near highs in terms of records on equity averages. That's for sure. But there's definitely some volatility in the marketplace here, Alan.
Yeah, no question. But I actually think the market's settling down, and I don't think people are totally focused on it. Well, here's what I'm saying. You know the Wayne Gretzky saying, "You don't skate to where the puck has been; you skate to where it's going." So many inflationistas out there worrying inflation's going to be out of control. If the 10-year Treasury is sitting at 1.6% and it's been here for month after month after month, despite everyone worried about inflation, it's telling the inflation probably is temporary. It probably isn't going to be permanent. And so when you head into next year, you're going to see growth slowing. And growth's going to be slowing because we're going to get past this rebound from COVID. Rates being higher are going to start slowing down growth. You've had a really strong U.S. dollar. that slows down growth, particularly in emerging markets and developed markets. China's slowing. All of that slows down this concern about inflation. And you know what it does? It sets us up for the world we knew before COVID. Slower growth. The growth stocks, the tech names tend to dominate again. We're not contracting. We still can generate profits, and the world will be okay. But the world's kind of settling, I think, back into that scenario. I don't think we're racing up to 3% 10-year Treasury yields, and therefore, I just don't think the market's going to be that disheveled, barring all kinds of exogenous shocks you can never predict.
So you're on team transitory.
That's where we're headed.
You're on team transitory.
I do. I'm in the transitory side. I think the combination of yields already having moved up, oil prices moving up, China's conundrum, and a strong dollar all put headwinds, if you will, or pressure on global economic growth going fast enough to create permanence of inflation at problematic levels. The problem is we sit and focus on restaurants and leisure travel and nail salons, and those things might be part of Main Street, but they're actually a very small percentage of Wall Street. That S&P 500 index is not dominated by commodity-laden enterprises. And so stocks can go up in this world where costs of wages of, some of these in restaurants and some of the costs of commodities are going up a bit, but not enough to stop this stock market. Something else is going to have to break this market. I don't think it's going to be inflation.
You don't think it's going to be inflation, but when you look at the price increases of so many different categories, right, very broad-based in terms of increases, they're pretty significant. You see the numbers alone in a bubble, and it's hard not to be shocked by them. What's the reality of those numbers, Alan? And do they, as much as they've gone up, do they significantly come down?
Yeah, well, the reality is the cost of my Thanksgiving turkey has gone up a lot, and the cranberry sauce.
Yeah.
And the cost of my trip at vacation this December, if I fly, has gone up a lot. But when you look forward, higher energy prices, higher borrowing yields, China's secular shift down in growth, that all is going to weigh on economic growth. And you're already starting to see the PMIs, the purchasing manager indexes that we, or at least economists, focus on, they're starting to roll over. And generally, inflationary statistics drop 3 to 6 months after the PMIs have crested, and they've already crested. And that's, I think, why that bond market also is sort of cresting here.
Did you say recessionary or no?
No, I don't think it's recessionary because it's just to start in the U.S. The U.S. is probably the strongest market for the most part, certainly the developed world in 2022. You're going to see greater weakness in the Eurozone. That's probably going to be the weakest major economy. China is clearly slowing. The emerging markets are going to be pressured by the strong dollar. But here in the U.S., if we're going to grow at close to a 5% real GDP growth this year, we're probably going to still grow about 4% next year, but it will be faster initially and will slow over the course of 2022 as we increasingly move away from this sugar high of getting out of COVID and getting back to the reality of a world of modestly higher prices, modestly higher yields, stronger dollar, all those things that slow down growth a bit. But the U.S. is still going to be a vibrant and growing economy, particularly in relation to non-U.S. economies for the most part.
Okay, Alan, so let's talk where our audience and where you think investors should be putting their money right now. How do you trade this environment?
Well, first of all, long is strong. I still remain an optimistic or constructive view on equities because equities are a reasonable inflation hedge. And I once again reassert, in a world of low yields, looking for other income alternatives and things like real estate-oriented income and things like REITs make tremendous sense because you can still drive real return with an inflation hedge as rents rise relative to conventional bonds. And the reality is, in lots of real estate sectors like warehouses and like apartments, rents haven't rolled over year yet in some of these. And when they roll over, the rent increases away from earthquake late in California, but anywhere else in the country, real rent growth is going up 10 to 15% in markets like Nashville. And so what you're getting is rent increases that translate directly into value increases in those properties. So I still think real estate-oriented income or other income alternatives, private credit, where the balance sheet strength of private companies is still strong, and you can buy floating rate debt, so you're not caught in the world of modestly high rates hurting your public fixed income. That's the places to look for income beyond dividend-paying stocks.
All right.
I think that's the place to be.
All right, Alan, nice to get some time with you on this Wednesday. Alan Zafran, founding partner and co-CEO at IEQ Capital, on the phone from Foster City, California, where you said just nearby, 4.1 earthquake. Yeah, that's California for you.
Yeah, my home. That said, those can be very jarring.
Yeah, right. Especially if you're not used to it, or even if you're used to it, it's still just a reminder of what's going on.
I never got used to it.
I bet. Just a quick check on the markets for you right now. We are seeing the S&P 500 just down about 10 points. The Dow Jones Industrial Average off 184, and the Nasdaq a decline of about 47 points. We've been bouncing around. We're off our highs and lows of the session. We're going to head over to our TV team for Beyond the Bell. That is live coverage of our market wrap on this Wednesday. It's live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs here, counting you down to the closing bell. And now here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences here on a relatively muted day. Carol, you had S&P 500. They pretty much opened the day flat. It's been in the red for a good portion of the day. Really hasn't managed to gain any traction whatsoever.
Well, and Romaine, it's been interesting to read some of the market analysis out there. They're saying that some of what we're seeing in the trade today is concerns once again about inflation concerns. But, having said that, I'm looking all along the yield curve, and rates are also down. They were higher during an earlier part, maybe right out of the gate this morning, but nonetheless, we're seeing them lower. So I'm trying to get my head around, if there's inflation concerns, why aren't, Tim, rates rising?
Right. We did see target earnings today, sort of a similar story from yesterday. And I think that plays into the inflation narrative. But at the same time, we just spoke to Alan Zafran at IEQ Capital, and he said he's on team transitory. He pointed to where the 10-year is and has been as a sign that inflation, well, it's not here to stay.
What was that acronym, Taylor, that you were told with your
Oh, yes,
moment?
I found a new acronym. Thank you, Caroline. I have a new acronym. Instead of TINA is old news. The new one is TEENY. Transitory, ? It's not inflation.
Yeah, and look, of
Not
course,
sure it's going to catch on, just saying.
it's not going to catch on. But but back to the point about the idea here that the bond market is telling a little bit something about those expectations and the flattening that we continue to see across the yield curves, with the 530 right now at 75 basis points here, and I think the 210s also slightly lower here on the day. Of course, look. This isn't a huge down day here. We'll let Caroline clear her throat for 1 second here. The Dow Jones Industrial Average down slightly here on the day, down by about 210 points here. We wait for these numbers to settle around this time, as we do every day, but it's going to be a down day. 0.6% on the Dow, about 2 to 0.3% on the S&P 500, 0.3% on the Nasdaq Composite. The big underperformer of the day, though, that's actually going to go to the Russell 2000. The Russell 2000 down about 28 points, or about 1.2% here. A lot of biotech names leading the slower. And actually, a lot of those EV makers like Fisker, which is down about 9% on the day, and a few of the retailers like Macy's, which is down 5% on the day, Carol.
And did you mention small caps? Because we did see the small cap industry world, I should say, taking a little bit of a hit, down about 1.2%. So
that's the Russell 2000.
Right? Yeah.
I just said that.
Oh, okay.
Well, despite calls, though, from Ned Davis Research,
Carol doesn't listen to me.
caps,
That's the moral of the story.
The Ned Davis Research, Ed Clissel's out with a note today saying the small caps are actually maybe now the place to be. So certainly we can debate that further. Let's go back to some of the big caps that we're seeing in terms of the S&P 500. For the radio audience, it's green in the winners and it's red in the losers on a sector basis. Let me just run you through a little bit of some of the action. It's auto, and some of these auto components are up about 3.4%. Otherwise, it really seems to be a bond story, Carol, with tech and real estate the second best performers. How much of that is if bond yields are falling? And then, of course, do you see this as the camera migrates down to the bottom of the screen with banks and some of the dividend financials? And then, of course, some of the energy index, that's off about 2%. Wondering how we're thinking about that reflationary trade today.
All right, let's take a look at some of the gainers. TJX, that was atop the pack in the S&P 500.
Yeah, you were talking this up yesterday.
I know.
You love the rummages.
I do. I love the search for a bargain. Stock was up about 6%. It was, though, out of the gate up almost 11%. Settled down a little bit, but still with about a 6% gain on the session. Rallying to a record after third quarter results, top analyst estimates. The company saying it is in an excellent inventory position heading into the holidays. holidays. Sales in the earlier part of the fourth quarter were very strong. But again, this is a different type of retailer. They also increased their range for expected share buybacks to, or by $500 million. So now they're looking at about $1.75 to $2 billion worth of stock in a buyback. And they
8
also...
days to Thanksgiving, by the way.
What?
8 days until Thanksgiving.
38 for Christmas.
Get your turkey towels as we speak. Moderna up about 3.4%, top in the S&P 500 and in the NASDAQ 100, seeking emergency use authorization of the COVID booster for adults 18 and over. You also had the Biden administration saying that they're going to help drug makers out in terms of production and giving $1 billion to those efforts. And Tesla, I wanted to mention Tesla because it's been under some pressure. We did see a gain of about 3.25% after a 4% gain yesterday, top in the NASDAQ 100 and the S&P 500, even as Elon continues to sell stock.
All right. Well, it was sort of a tale of two different retailers today, TJX versus what we saw with Target. Target shares finishing the day down by more than 4.7%. Talked about this a little earlier. We've been talking about it all day. A really similar story with what we saw with Walmart yesterday. A really good report, except for gross margins. Target even raised its full-year sales guidance. The company isn't passing along these rising costs onto consumers. They're eating them, and that's digging into gross margins. Higher costs, labor expenses also weighing on the company. I did talk to CFRA analyst Arun Sundaram earlier today. We had him on Quick Take Stock. He actually said today's slide is a buying opportunity, and he raised his price target to $308, so significantly higher than where it's trading right now at $253. Also, keep an eye on Visa. Shares lower by 4.7% today. Fell the most in over a year at one point today after Amazon said it will stop accepting purchases made with the credit card issued in the UK as of next year. In the U.S., Amazon does have the Visa branded credit card.
Can I pay with the Visa in the United States?
For now, you can.
Okay.
But Jenny Serrain actually had a story out just a little while ago, a Bloomberg exclusive.
I like her, yeah.
Yeah, she's fantastic. She talked about Amazon considering this change to its co-branded credit card, potentially moving to rival MasterCard as a way to secure better terms from Visa.
In all seriousness, why do we need Visa, MasterCard, Amex? I mean, aren't we at a stage now where some of these other sort of newfangled fintech payment systems could kind of circumvent that?
Are you saying we should do crypto via?
Yes, it always comes back to crypto.
But even a lot of those fintech companies are still using traditional payment methods at this point.
Right, for transactions, right, to actually process the transactions.
Exactly. We saw shares of MasterCard move lower today as well. Rivian Automotive, Carol, you talked about Tesla. Guess what? Rivian stock, it goes down. It doesn't just go up. This is the first time it's gone down. Went down 15% today. It's trading at $146. You have to go all the way back to, I think, Monday for it to be trading this low.
All the way back to Monday.
Not a move on fundamentals, by the way.
All-time decline there.
Not a move on fundamentals.
Let's look at what's also moving in the FX world. And it's notable that, talking of wild rides, yen has been on quite the volatile mix. We saw yesterday it sell off significantly. Today it's having its best day since August, where the Japanese yen up 0.6%. So finally we get a little bit of a dollar weakness story on the day. We're seeing the Canadian dollar, though, weaker than the US dollar. That in large part because this is a tale of what's happening in commodities. Similar for the Aussie dollar, up by 0.5%. Inflation, of course, is a key watchword for everyone. This is a global story. It's not just what's happening here in the United States. The Great British Pound up by 0.4%, as we currently see the UK's inflation reading coming in the strongest in a decade. I look at what's happening in oil. We're off by almost 3% in WTI crude. Will we see some sort of tap into the reserves in the United States? It's still being discussed. Natural gas actually down by some 6% after we rallied yesterday. And sovereign bonds, mixed picture. We're seeing Canadian 5-year currently yields pushing down in Canada and the US, up in Japan.
All right, want to get to Cisco Systems because they are out with their earnings and the stock is dropping about 8.4% here in the after hours. First of all, let's get to the outlook because the company sees second quarter revenue up 4.5% to 6.5%. The estimate out there was much more optimistic, about a 7.4% increase. It also sees first quarter service revenue, getting to the breakdown of some of the companies, different business divisions, $3.37 billion. That was a slight miss of $3.44 billion. It also, let me go to the first quarter revenue number. That was pretty much on target, $12.9 billion versus $12.99 billion, the estimate. First quarter adjusted EPS, 82 cents a share. That's a penny better than what Wall Street was expecting, but that outlook is definitely a disappointment. The stock, it's a mega tech company, right, and plays into the networking and connected space. It's been up about, almost 30% so far this year, so maybe expectations going into it were pretty high. But this company also plays with a lot of the semiconductor companies. That's where they get a lot of supplies from. So it'll be interesting to see what they have to say on that call, Tim.
You're watching shares of Cisco. I'm watching shares of Sonos bouncing around in after hours. At first, when these numbers came out, shares were down 8% after hours. Now they're higher after Sonos announced a $150 million share buyback. As far as results go, Sonos pretty much met expectations on the top line, but it was a miss on the bottom line. In a statement, the company's CEO, Patrick Spence, who we're going to be speaking to tomorrow, said we've just completed a record fiscal 2021 and are confident in the long-term growth, profit, and cash generation of our model. We are committed to driving long-term shareholder value. Looking forward to any commentary that the company has to say about supply chain challenges and any delays as we get into the holiday season and what consumers can expect, Romain.
Yeah, I think that's more what I'm interested in hearing, how they're going to deal with that. Obviously,
Yeah.
they deal with a lot of these parts issues, and we've been joking a lot today about how some of these supply chain issues are easing. There was actually an interesting note out by Goldman today saying that some of the issues affecting Apple, that's starting to ease. We've also heard from other companies, including over at Target, saying that, look, I mean, it's not as bad as it was.
Hey.
That doesn't necessarily mean we're back to pre-pandemic levels. And today, Tim, my couch arrived.
Congratulations on your couch. I got to tell you,
Congrats.
anecdotally speaking, I actually ordered a Sonos for my father for his birthday back in August.
not watching.
And did it arrive?
It took weeks for it to arrive, and that was at that point then.
Meanwhile, that we're hearing, of course, from members of the Fed still, and Evans saying supply shocks have gone on longer than I expected. So clearly, this anecdotal evidence that things are starting to turn up, mainly in Romain's apartment, well, for many, still not occurring.
Well,
Couch surfing at romance.
The sofa's there. It's set up. We're going to have a sofa party. All 5 of you are invited.
Well, Cisco,
And we're not allowed to touch it.
Cisco.
Yeah, well, you can't sit on it. That way.
All right, Cisco expects supply chain challenges, by the way, which have weighed on profit to carry into at least the first half of the year. So that's in their press releases. No talk of couches, but they are talking about the supply chain overall.
Yeah, we're keeping an eye, by the way, on Nvidia earnings coming off after the bell as well.
All right, folks, that's going to do it for our market wrap coverage beyond the bell on radio, TV, and on YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So what's Sonos doing in the after hours?
Bouncing around a little bit higher by more than 5% right now. I got to tell you, as soon as that headline crossed about that $150 million share buyback, shares before that, shares were down as much as 8% in after hours, Carol. So investors certainly happy about that.
Right, and it's a usual reaction that we see a lot. All right, we're going to dig a little bit to that and watch out for Nvidia. In the meantime, back to World and National News and to Nancy Lyons. Hey, Nance.
Thanks, Carol. A vote is underway in the House on whether to censure Congressman Paul Gosar for posting a violent anime video depicting him killing Congresswoman Alexandria Ocasio-Cortez with a sword. She says what people in Congress say means something.
When we incite violence with depictions against our colleagues, that trickles down into violence in this country.
House Minority Leader Kevin McCarthy defended Gosar and took a swipe at Democrats.
The video was deleted, but Democrats won't listen because they will do anything to distract from the failures of one-party rule in 1 year, destroying a nation.
Gosar has rebuffed calls to apologize. The man known as the QAnon shaman, Jacob Chansley, was sentenced today to 41 months in prison for his role in the January 6th insurrection. Chansley is seen in multiple videos that day wearing a buffalo hat and no shirt, cheering on rioters as they ransacked the Capitol. In court, Chansley expressed deep remorse for his actions and says he takes full responsibility. Kyle Rittenhouse's attorneys have asked the judge to declare a mistrial before the jury reaches a decision, saying the defense received an inferior copy of a key video from prosecutors. Prosecutors countered that the jury saw the highest quality version of the video during the trial and it was played without objection. Rittenhouse is facing trial for killing 2 people and injuring a third during a Black Lives Matter protest. In Kenosha, Wisconsin, he claims he shot in self-defense. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. And an interesting story on the Bloomberg terminal has to do with the metaverse. And Epic Games CEO Tim Sweeney maybe the most enthusiastic supporter of the metaverse after Mark Zuckerberg, who renamed, as we know, his entire company Meta Platforms. But the metaverse is a multi-trillion-dollar opportunity, according to the Epic CEO.
I don't know if you were the video game maker CEO, wouldn't you be excited about the metaverse?
Are you talking your book a little bit?
Yes, exactly.
I mean, you think about the growth potential, right? I mean,
Yeah.
when you think about the metaverse and video games, that seems to make so much sense.
Yeah, have you tried the Oculus headset?
I have not.
So this is Facebook bought this for a couple $2 billion
Right.
years ago.
I don't think
This
I played
is-
with it.
It's pretty cool. It's
Yeah.
really cool. I'm not even a gamer, and I think it's really, really cool. And the way that it's improved in the last few years, like newer generations of it, are really good. The question is, Carol, does Facebook successfully pull this off as something that's not gaming related, in the sense of a metaverse actually having? And I don't want to denigrate video games, but like I'm using air quotes here, like the productivity element of it, right?
Right.
And that's what Mark Zuckerberg talked about when he presented the name change for the company. He talked about having meetings in the metaverse. And I wonder what that looks like beyond gaming, because I think it's fair to say that a lot of the way that people right now think about the metaverse is similar to what Tim Sweeney says, that this is something that is going to could work very well when it comes to gaming.
Yeah, I mean, I think when people think about the fits when it comes to the metaverse, this is an easy one to get and understand, and really could create this whole new type of world for playing video games, whether you go places to do it or whether you do it in your home. So it makes a lot of sense. I guess what I find interesting is it's the companies that are going to be providing content, but it's the technical infrastructure, right? That's going to be an investment play potentially if it lives up to this multi-trillion-dollar opportunity.
Yeah, and as Mark Gurman talked about in his newsletter Power On over the weekend, Apple getting into the metaverse is sort of the real way that it goes further.
All right, we're going to continue to track this for you. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After the bell earnings, still waiting for Nvidia. Shares down 3.1% ahead of its report, but we did hear from Cisco Systems moments ago. Shares are slumping after its quarterly revenue forecast trailed estimates. Cisco Systems down now by about 7%. Also reporting moments ago as the headlines clear right now on the Bloomberg Professional Service Victoria's Secret third quarter net sales, $1.44 billion. Estimates have been $1.46 billion. Stocks lower today on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise rates sooner than expected. S&P down 12, a drop today of 0.3%. The Dow down 211 today, down 0.6. NASDAQ down 52, a drop of 0.3. 10-year up 13.30. 10-year yield 1.58%. Spot gold up 0.9%. 18.66 the ounce. Big move for crude, down 3.4%. 78.05 a barrel. Natural gas tumbling 5.8%. Nat gas 487 per million BTUs. News involving Disney Cruise Lines. The days of bringing unvaccinated kids aboard a cruise ship are winding down. Disney becoming the first cruise company to introduce a vaccine mandate for passengers 5 years old and up. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic, a little bit of earnings flow. Sonos and Cisco, watching them in the after hours. Sonos up now about 4.4%. We are seeing some pressure on Cisco, and we're awaiting Nvidia, which should cross at any moment. So let's see what Dan Morgan, VP and Senior Portfolio Manager at Synovus Trust Company, has to say. They've got roughly $21.5 billion in assets under management. He's with us back on the phone from Atlanta. We love talking chips with you. When I think of Cisco Systems, this is a company that works with a lot of chip suppliers. Dan, what can we pull away from Cisco's results?
Well, you're right, Carol, because Cisco's a hardware company. You know, it's kind of funny because we don't talk about Cisco that much anymore, but we used to back in the 90s.
Isn't that amazing? You know, it's like a massive company. It's like, what, 240 billion market cap or something like that. And you're right, we don't talk about it a lot.
Yeah, I mean, they were they were in the forefront of the router switch market when we make the movement away from the mainframe to a client-server environment where we started using our PCs to tie into our servers.
Right.
And then that business became very mature, so they had to move into other areas like wireless and security and so forth. And it's been a tough transition for them, Carol. I mean, this quarter looked pretty good. I mean, they came in pretty much in line with expectations in terms of product revenue and service revenue. They guided for their upcoming second quarter 80 to 82 cents, which is in the range, so to speak, of what the street was looking for. But they've got a bit of a mountain to climb because they've been kind of left out of all the fun, right? The fun's been in the cloud and artificial intelligence and the migration to 5G. You and I talk about that all the time. Mm-hmm. And Cisco, they're getting there, but they're still, I think of them still as a router switch company.
Yeah, right.
We're getting some breaking news on Nvidia earnings right now. Shares in after hours are moving higher by 2.6%. Dan, Nvidia shares jumping 2.5% after that earnings beat. I'm going to go through some of these numbers here and give you a bit of time to get caught up because I know this is a company that you watch really closely. Third quarter adjusted EPS coming in above estimates at $1.17. The estimates were for $1.11. Third quarter revenue coming in at $7.1 billion, a beat on the top line there as well. Estimates were for $6.81 billion. Third quarter adjusted gross margin at 67%. That's slightly beating estimates. We're at 66.9%. What do you, on first blush, Dan? What do you make of that report?
Yeah, Tim, good numbers coming out of Nvidia. We know the stock has been trading up in anticipation of this upcoming quarter. This is their third quarter, 22. What really stands out to me is that revenue number, Tim, because I had $6.8 billion. That was about a 43.9% year-over-year increase.
and they came in at $7.1 billion. They also beat my GAAP EPS estimate at 0.927. That would have represented a 75% increase, and they did $1.17. I think what everybody's really focusing on with Nvidia, Tim and Carol, is to see how that data center does. That data center group is expected to post revenues of about $2.693 billion. That would be about a 41% increase. You know, we think of Nvidia, we think of gaming. That's where their core business is, but they've moved into artificial intelligence and also into the data center space. They make the chips that go into AWS and Azure and GCP, and that's the exciting part of their business. I was just curious if we got any of those numbers that came in off data center
Yeah,
or
data
even
center
the gaming group.
Yeah, data center revenue came in at a record $2.94 billion, up 55% from a year earlier. That's according to the press release from Nvidia.
Yeah, so Tim, that's a big beat because I had $2.693 billion. And Carol, you may remember because we've talked about Nvidia in the past. Gaming was always the real driving force.
Yep.
And they had a couple of quarters where actually the data center group was a little bit, you know, lethargic. It wasn't growing at the same pace. And then the most recent last quarter and this quarter, we've had an acceleration in that group. And you guys know that the cloud is somewhat cyclical, right? It's kind of ebbs and flows in terms of its growth. But this is a dynamite number coming out of Nvidia, at least from what I can tell so far. You know, there's a lot of good things happening in that data center area in terms of some new chips that they have coming out. And the demand has been very strong. And we saw good numbers from AWS and also from GCP and Azure a couple of weeks ago when we had Amazon, Microsoft, and Google. So not surprising that we have a good growth coming out of the company that makes the chips that go into the cloud.
So how are they able to do it and keep it going?
I think it's just because the secular growth rate right now, Carol, in terms of data center demand continues to be very strong. I mean,
but how are they able to meet that demand when we keep talking about all the, you know, bottlenecks within within the chip universe? No, my bad question.
Yeah, we always have to go back to that, right? Supply constraints. We can't have any fun. And just enjoy
Sorry.
the number, right, Carol?
No, but I'm trying to get my head around it.
You
know, like how is it that some people are saying we have chip shortages, some don't. Then we're seeing some bigger macro stories that's saying that some of that is easing. I turn to you for clarity.
And again, Carol, goes back to the conversations we've had about this in the past. There are certain sectors that have been hit harder than others, right? So we know about the auto and the industrial has been the kind of the poster child in terms of the toughest in terms of shortages. And then there's been other areas that have not been hit quite as hard. And, you know, Nvidia hasn't really communicated in the past about having super difficulty, right? We got a little bit of guidance, for example, with Qualcomm. They were somewhat talked a little bit about it. We had Lam Research talk about it on the last quarter. Texas Instruments mentioned it. So it'll be interesting. I think that's kind of the thing that we're going to want to hear on the conference call is, you know, Nvidia is starting to experience some issues, you know, in terms of their ability to kind of meet demand because of these chip, you know, shortages that we keep hearing about from all over the world. So,
right.
It doesn't look like they affected them on this quarter.
Nope, up 2.5% in the after hours, and all that metaverse talk is really sending the stock higher overall this year, up 124%. Dan Morgan over at Synovus, thank you.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So our next guest is closely identified with a well-known company and brand. We're talking about Best Buy.
Best Buy, yeah, we're really excited to speak with the founder of Best Buy in just a few minutes.
Dick Schultz is going to join us in just a moment. So let's first get to some of the news after the closing bell. We had a bunch of earnings, Charlie Pellet.
You think so? We certainly did. Let's begin with Cisco Systems. It is the biggest maker of computer networking equipment, delivered a lackluster revenue forecast for the current period, hurt by a shortage of components that is making it difficult to keep up with demand. Cisco Systems declining 6% in extended trading. Moments ago, we also heard from Nvidia. The chipmaker forecast revenue for the fourth quarter that beat the average analyst estimate. Right now, we do have Nvidia shares. They are pushing higher by just about 3.5%. Stocks lower today on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise interest rates sooner than expected. A down day for the Dow, the S&P, and NASDAQ. Today, we saw the S&P lower by 12, a drop today of just about 0.3%. The Dow Jones Industrial Average down 211, drop there of 0.6%, while the NASDAQ Composite Index fell 52 points, a drop there of 0.3%. 10-year yield today 1.58%, 10-year up 14.30 seconds, and West Texas Intermediate crude down 3.5%, 77.94 a barrel on WTI. Natural gas, big story, down 5.6%, 4.88 per million BTUs on natural gas. So again, recapping, the Dow, the S&P, NASDAQ all declined today. Gold up 0.9, 18.66 the ounce. Got to mention the Russell 2000 lower today by 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, appreciate that update. Well, our next guest founded a well-known name in the retail space back in the 1960s under actually a different company name, renaming it years later to Best Buy, building it out into today's nearly $33 billion market cap electronic and appliance retailer. Dick Schultz is founder and chairman emeritus of Best Buy, also founder of the family foundation that bears his name. And through a donation he and his wife made to the University of St. Thomas in St. Paul, Minnesota, a school, by the way, that he enrolled in before joining and serving active duty in the Air National Guard. With that donation, though, was founded the Schultz School of Entrepreneurship, which cultivates tomorrow's entrepreneurs and startup companies.
Dick Schultz joins us now. Dick, thank you so much for joining us on the program. How are you today?
I'm doing just great, Tim. Thank you so much. I appreciate it. And Carol, thank you for that introduction.
You're joining us from Naples, Florida, a much warmer place right now than Minnesota.
Yes, it is. It's actually in the high 70s, and it is still a little bit cloudy outside, though. The sun isn't shining today.
All right. Well, it's already dark here in New York City. Hey, how are you? I mean, first of all, I want to get into the work that you guys are doing at the School of Entrepreneurship. But you are also someone who has seen lots of cycles. You understand how to run a company. You understand supply chains probably like no other. You've built a lasting business while seeing others do the same and while seeing some other companies come out with a lot of fuss but are no longer here today. What are the lessons out there, especially when you look at some of the big, broad macro discussions that we are having on a regular basis?
You know, I think it probably comes down to teams of people that understand the importance of advanced planning. And I can tell you, just based on the ongoing relationship that I've had, certainly with all the CEOs, you know, that have followed, you know, my term there, effectively have reinforced, as Corey just did again this morning with me, you know, how proud she is of the teams we have of the company that started back in early last year, focusing on leveraging the partnerships we have with so many suppliers that are important, you know, conduits of product for us, and need to increase, if you will, and find ways to get meaningful amounts of product, you know, to us, you know, in our distribution network. As you know, we have nearly 1,000 stores across the country, and essentially have now conducting a very robust online business, along with all the activity that happens in our stores and how it connects with our service facilities. And so it's really important that, when we deal, as we do with customers in so many different ways, instant gratification is an important part of why customers deal with us. They know, A, for the most part, they can find it. B, they can understand the differences of it. C, they know they can get availability on it any way they choose. And so having that product is critical. And so the logistics and supply chain teams at Best Buy are just extraordinary. And I was assured, by Corey that she's confident, that we're going to be in stock on the overwhelming majority of everything we sell. And yes, there is some, sporadic outages of product. She did mention specifically maybe gaming was an issue that comes and goes. It's up and it's down. Appliances have been somewhat of a challenge all year long. And for the most part, everything else we have pretty much in stock. And if it's not in stock, it's just very spot outage, and we get product to our customers quickly.
And Corey Berry, of course, is the current Chief Executive Officer of Best Buy and one of the few female CEOs of an S&P 500 company. So I just wanted to mention that.
Hey, Dick, you've been doing this
involved
in Best Buy after starting it in 1966, so for decades at this point. I'm wondering, though, if you could contextualize the supply crunch that we're seeing right now. And certainly a lot has shifted there, and we've seen manufacturing move from more domestically to overseas as to where it is now. Have you ever seen supply chains this snarled?
No. It's the disruption has been extraordinary. I personally blame the pandemic last year for an overreaction by the overarching majority of product production and supply companies in Asia for the most part. Obviously, everybody knows how instrumental China, somewhat less Japan, but also Vietnam and other points in Asia have been forced in many ways to cut back production, close factories. They had worker issues, they had supply component issues, and they even shut down, if you will, countries or islands, along the way. I've never experienced anything like that in my career. So I understand, where these outages, would come from and what the issues would be, but maybe it's unfair, but I would have to say the larger box companies, whether that's, building products, whether that's electronics, whether that's general line distribution, whether that's food, these people clearly know how to plan ahead of time. They know how to get in front of, where these things are. They have the largest pen, if you will, in writing orders for product. They obviously have a capital base and a strong consumer franchise. So for all intents and purposes, their supply chains are relatively uninterrupted. The real issues are with smaller companies who have to rely on alternative sources of ways to get product, and then, in fact, how much they have to pay for it. So I think there's mixture out here in relationship to fairness.
Hey, Dick.
But will this stabilize? I think the answer is yes.
Hang on for a second. We just got to do a little bit of news, but we're going to come right back with Dick Schultz, founder, chairman emeritus of Best Buy. We want to get into his School of Entrepreneurship. We'll do that when we come back. First up, though, World and National News with Nancy Lyons. Hey, Nance.
Thanks, Carol. The House has voted to censure one of its own, Republican Congressman Paul Gosar, for posting a violent anime video on Twitter showing him killing Congresswoman Alexandria Ocasio-Cortez with a sword. He spoke ahead of the vote this afternoon.
If I must join Alexander Hamilton, the first person attempted to be censored by this House, so be it. It is done.
Gosar's censure is the first such action against a House member in more than a decade. Lawyers for Kyle Rittenhouse have been clashing with prosecutors today over a request by the jury to re-examine video evidence from the trial of the teen who killed two men last year at a Black Lives Matter protest. Jurors want to see footage from the protest, including drone video that prosecutors say shows Rittenhouse aiming his weapon at someone who is not threatening him. That could undermine his claim that he wielded the rifle in self-defense. Defense attorneys are requesting the judge declare a mistrial. 2.6 million kids from between the ages of 5 to 11 have received their first COVID-19 vaccine. That's the word from White House COVID coordinator Jeff Zients.
Just 10 days into our program being at full strength, we're at 10% of kids. For perspective, it took about 50 days for us to reach 10% of adults with one shot.
Zients says more than 30,000 sites are now administering vaccines to younger kids, or one site for every 900 children ages 5 to 11. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Interesting story by our Jillian Deutsch has to do with Apple. Apple's going to begin making parts and tools available for customers to fix their own devices. A significant shift in longstanding policies over who can make repairs to the costly gadgets. It used to be, right, if you wanted to repair, you had to take it to Apple, the Genius Bar or whatever.
Or
right?
like an authorized repair facility, right?
Otherwise, they kind of wash their hands of it, right, if something goes wrong.
Yeah, because there are a lot of pop-ups that will fix your phones, especially in the New York City area, like a cracked screen, for example. But there's been the issue that it could void a warranty. This is called the Self-Service Repair Program. It was announced on Wednesday. It's initially going to allow people to fix the display, battery, and camera for their iPhone 12 and iPhone 13. Later, customers will be able to repair their Mac computers with M1 chips. The service, Carol, will only be available in the U.S. starting early next year, but will expand to more countries throughout 2022.
That's so interesting.
It's really cool.
Right? It's such a switch
Yeah.
for them. More than half of American states have considered laws that would force electronics companies, including Apple and Microsoft, to make it easier for customers to repair their own devices, but many have been voted down or dismissed.
Yeah, that's what's so interesting. There have been some lobbying efforts, too, to try to prevent it from some companies. And you do have consumer advocacy organizations that are, this idea of the right to repair, I believe, is what it's called. Here's my question, though.
Yeah. What?
I've looked at some of the instruction
I
manuals.
don't even want to touch it.
Exactly. That's what I was, you know that was where I was going. So there are websites like iFixit.
Right.
It's a small firm. It's actually based in my hometown. And I've talked to these folks for years about stories because they do the teardowns
Right.
of these phones. So they find out what's inside them and other consumer electronics devices. They have detailed, manuals on how to do this stuff. And I'm not even good at Legos. So I'm like, how am I going to take this apart and fix the screen?
I don't know.
Without
creating
ruining
new
this
problems.
thing. Yeah.
Without creating new problems. I know. My biggest, fix is like turn it off, recycle, turn it back on.
Exactly.
Make sure my software is up to date.
And then go to the Apple Store.
This is a huge switch. There's a lot of certified Apple service providers out there, so they've got to be watching this very closely. All right, we're going to get back to the founder of Best Buy, Dick Schultz, in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Cisco Systems. It is the biggest maker of computer networking equipment. It delivered a lackluster revenue forecast for the current period, hurt by a shortage of components that's making it difficult to keep up with demand. Shares are now down by 3.6% after hours. Also reporting after the bell, Nvidia. Shares heading the other direction, up now by 3%. The chip maker forecast revenue for the fourth quarter that beat the average analyst estimate. Right now, we are looking at a down day on Wall Street. The S&P 500 index tumbled 12 points today to 4688, down 0.3%, very close to a record. Stocks lower on concern that inflation could pose a challenge to the global economic rebound, forcing central banks to raise rates sooner than expected. Treasuries rose with the 10-year yield now 1.58%, 10-year up 14.30 seconds. The Dow down 211, down 0.6%. S&P, as I mentioned, down 0.3. NASDAQ lower today, also by 0.3%. The Russell 2000 index of small cap shares down 1.2%. Gold, spot gold up 0.9%, 18.67 the ounce, and West Texas Intermediate crude down 3.4%, 77.98 a barrel on WTI. Natural gas down 5.4%, 4.89 per million BTUs. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we talk a lot about Bloomberg Business Week and our rankings on business school programs. Well, the university, we're talking about St. Thomas, their school, the Schultz School of Entrepreneurship, jumped 10 spots to number 23 in the latest Princeton Review list of top undergraduate entrepreneurship programs. And the Schultz School also ranked number 1 among the nation's Catholic universities and colleges for students studying entrepreneurship. Well, the man behind that school is none other than Dick Schultz, the founder and chairman emeritus of Best Buy. He is still with us on the phone in Naples, Florida. Let's talk about this, the rankings. You know, Dick, to be quite honest and to be fair, we talk a lot about the Business Week school rankings, and the schools that we cover and rank say these kinds of rankings make a big difference. What does it mean to you guys?
Well, first and foremost, thanks so much for that accreditation, because obviously this is a real honor, you know, to have moved so materially and so substantially in a prestigious ranking like the Princeton Review. And that's a 10-point move, and to be in the top 25 in the nation is pretty substantial for all of us. And not only am I proud, obviously, of the work that's being done, you know, at the school, and obviously the impact that it has on people that are looking for the place, the right place to go to get the best education they can on how to take control of their own destiny. Entrepreneurship is now the 8th largest major at the University of St. Thomas, and fully 25% of the undergraduate students take entrepreneurship classes. And students in entrepreneurship classes represent fully 74 different majors on the campus.
That's a lot.
So the school has really embraced the importance of students of all walks of life there taking advantage of what self-aspiration means, about what you can be, what you can do, and what you can accomplish anywhere you choose if you have the right kind of background, the right kind of training, the right kind of engagement, the right kind of viewpoint towards how to make yourself more successful. And I'm real proud of the way that the school teaches kids. It isn't about lectures as much anymore. It's really class engagement. It's about current events. It's about hot topics of real importance in business, industry, and communities. And the Schultz School has gotten real engaged in what that means to the students, and the partnerships that have been drawn with businesses throughout the Twin Cities in particular, you know, brings real life work to the classroom.
Well, that's actually what I wanted to hit on with you, Dick, and because I'm wondering, as somebody who built Best Buy into a business today, what it is from nothing to a company with a value of more than $32 billion. What type of entrepreneurship can be taught in schools versus what you actually have to learn by just going out and doing it?
School of Hard Knocks.
Well, I think the School of Hard Knocks was my way.
Right.
And candidly, yes, it was successful, but B, there lots of fits, lots of starts, lots of mistakes, most of which fortunately were key learnings. But the bottom line is it takes longer, to get where you want to go, when it's trial and error. And I think today more than ever, education, is the key element that will help separate those who succeed in business with those who have to stumble, if you will, or can't afford too many setbacks. And so the Schultz School of Entrepreneurship just focuses on teaching these kids, in an engaging fashion, what they have to know to succeed. Business analytics is probably one of the most popular classes we have to offer, and marketing is right alongside of it.
Yeah.
So when our students graduate, whether they're starting their own business, whether they're joining a company to learn more about on-the-ground experience, they know where to look. They know what questions to ask. They know where to find the problems. And then they work collectively to try to find better solutions. So they're more impactful employees, even in a large corporation setting. And I know Best Buy, for one thing, does look, towards the school to find bright, engaging students that want to learn, whether it's marketing or finance or logistics or supply chain.
Dick, one thing I wanted to ask you, and this is something that we've covered a lot over the last, I feel like 15, 18 months during the pandemic, coming off of George Floyd, is diversity, how it's been missing to some extent in Silicon Valley, and whether you're a woman or a minority getting access to startup funds. How are you thinking about diversity and inclusion in this program?
That's such a great question, and for me, really, I look at a person's heart. What's in your heart? It isn't the color of your skin. It isn't even your background. It's the passion you have to succeed. It's what you're willing to do, to make that success real. And when you interview people today, you can find easily, the emotion, the energy, the sensitivity people have about wanting to succeed in their life, to build a career that's meaningful. And so it's the interview process that we go through, certainly, at the university, but certainly at the Schultz School, because entrepreneurship, and starting any business is risky. And you have to have somebody, that has the kind of staying power, has the kind of commitment and passion, perseverance, to stay in the game and work hard. That's why the school obviously has to have networks. It has to have mentors. We have almost 400% more mentors this year than we had last year, because we tapped into the alumni base and talked to people that have graduated from the University of St. Thomas years ago, and asked them to put out a helping hand for these youngsters that are coming out of school wanting to start their own business. So there's a lot of alignment.
So I have one last question, and it's really, I think it's so great because entrepreneurship, that's how a lot of people are coming out of the pandemic. They want to do things on their own, and so it's great to see that you guys have created this facility to do this. I have one quick question. Back in 2012, you made a bid to buy out Best Buy. Are you done with that? Just quickly.
Oh, yes. Yeah, absolutely. We have great people running the company, great leadership, wonderful managers, both Hubert and Corey in particular, the last two leaders. Wonderful people, totally aligned around the culture the company has spent decades building. And as no question about it, I'm just thrilled with what's going on and how well the company is being managed.
Okay, just wanted to check. Do come back. We'd love to hear more about this program, and also, as a result, maybe some of the companies you ultimately will invest in as a result of these entrepreneurs. Dick Schultz, founder, chairman emeritus of Best Buy, and a donation he and his wife made to St. Thomas in St. Paul, Minnesota, the Schultz School of Entrepreneurship.
Yeah, a very generous gift.
Yeah, exactly. All right, for Tim Stanovic and the whole Business Week team, I'm Carol Master. Have a great evening.